sideways trade for the NSC, and the banks again needing a little more clarity on what the CBK stance is on the discount window lending rate. What's going on once again?
I think interest rates on the interbank have risen far too quickly than the central bank was comfortable with. So if you look at the level now at about 26%, whereas maybe a few months ago we were around the same level, close to the central bank rate of around 6-7% thereabout. I think the central bank was keen on sort of reining liquidity and sort of ensuring that interest rates rise and sort of to cut off the cheap sources of funding for banks which were thought to be speculating on the currency. But I think they're looking at 26% and it's looking too high. So what they're doing, the measures they've done more or less appear to be geared about towards reducing the interbank rate, maybe to below 20%.
All right, well, what does all of this mean for the fixed income side of the market? What are yields like? How have they performed?
Well, now it's, for anyone holding their bond portfolio now, it's actually taking a very big hit because, you probably got your bonds at a much lower interest rate and, rates have really increased significantly. Obviously, we are seeing investors now being particularly keen on new offers, and they're bidding quite aggressively on new offers, as high as 18% on new offers. So I think increasingly we see investors shunning the equity market and focusing more on debt because the inflation issue is probably overstated. It's going to cool off in a few months. So, anyone holding bonds, at the current level of interest rates is likely to benefit when interest rates start coming off.
Let's turn our attention to performance on the equity side. Like I said, sideways trading, but which are the stocks that some investors are interested in? On Friday, for instance, we saw some movements in East African Portland cement. We've seen movement in Sasini. So basically the cement makers and the agro stocks have been fairly good performers, I suppose earning more because of the weakened shilling for the agro producers. Is that still the trend this week?
Yes, it is. Although surprisingly, investors haven't been rewarding, such stocks that well. Bamburi actually last week ended lower, despite posting over 20% rise in profits, and still posting sort of a good outlook for the year. Sort of giving a strong guidance for the rest of the year. So it's actually quite surprising, but I think it's because of the interest rate. Somebody has to balance, and I think we might see some of the other stocks re-rating downwards. I mean, if the agriculturals and the export-oriented companies are not really getting rewarded, then which other companies really should be doing well,
Okay, let's take a look at Mumia is also coming out with pretty interesting figures, and they expect that going forward the sugar price to rise. We're now getting reports that they're on an acquisitive drive, wanting to buy out some of their rivals. What are we going to see within this sector? Some millers already concerned about the pricing of sugar as a soft commodity. Is Mumia going to dominate the space?
Already they're quite dominant, and if you look at the exchange rate where it is, it becomes very expensive to import sugar into the country. I mean, historically we've had cheap sugar being imported, based on the cheap currency and also the commodity being cheap globally. Now we are seeing it being very expensive to source sugar globally, and even without the tariff, Kenyan sugar is still quite competitive. Going forward, I think Mumia has to position itself very well to ensure that it maintains its position and possibly acquire a player or two. But obviously funding will be a problem, but we'll see how that goes.
What about input costs there, Eric? Because obviously we're seeing the price of electricity rising now that there's even some rationing in industrial areas. Certainly that should have bearing.
For Mumia's sugar, it's not a problem. They generate their own electricity. In fact, the biggest concern for them is to get the raw cane. So in terms of cost, that's really their biggest cost, and they get it from outgrowers. So these are farmers who are sort of around the factory. In fact, of late, they've had to increase the price they pay to those farmers because there isn't sufficient supply of raw cane. So, immediately that's really their biggest concern. Electricity, they do generate their own electricity.
All right, let's talk about what we're likely to see in the near future, and already the spotlight on Family Bank. We're told that just by way of valuations, the company's valued somewhere in the region of 7.3 billion. Again, the question of timing as they're thinking about listing in the next 2 months and what the pricing would be for the share. What we've seen over the counter, something like 30 Kenyan shillings. How would that reflect on the NSE? And is this the time for Family Bank to be coming onto the mainstream?
I think for Family Bank, initially it will just be to list maybe by introduction. I suspect they probably have most of the shareholders they need in their books. So it will just be to come into the market. If it's raising capital, they can raise that a little bit later because market conditions at the moment will not allow them to raise a substantial amount of capital at that level of valuation. So at the moment, I think it's just listing by introduction and then waiting for valuations to improve.